Good morning. I'd like to give everybody watching this morning an update on the sale of Voya and most of its insurance entities to Resolution Life, an offshore private equity life insurance company that buys runoff life and annuity business. This is really something that all financial advisors should be aware of. And if you have a client who owns a Security Life of Denver, ReliaStar, Equitable of Iowa, Aetna Life, ING, or Voya policyholder, you should be concerned about this, and we're going to ask you to take action to protect your policyholders. Admittedly, it's been a very tough time for the life insurance business as bond yields continue to drop. The products sold by ING in the United States assumed much higher yields on bonds, and this has turned out to be a bad bet for the shareholders of first ING and now Voya. Many of these life and annuity products have turned out to be far less profitable than anticipated. As a result, the management of ING wanted to get out from under these promises and had previously announced its exit from the U.S. life business. As rates continued to drop, Voya was being forced to increase reserves to support the promises behind these policies. With few interested in buying this block of business, Voya decided instead to use private equity, not just to get rid of these obligations, but to reinvest a portion of the proceeds of the sale to fund the very private equity purchasing this block and to profit from a new structure that they were selling to. This will result in making all policyholders less secure. In December, Voya announced a press release with this announced sale to Resolution. And it said, "We see this dramatically improving our risk profile, reducing our interest rate risk and credit risk and mortality risks." I asked two questions. Who were these risks passed to in the transaction? And why would it make sense for Voya to reinvest in the very offshore entities that it is selling to? Well, I think the answer is apparent. The policyholders will really be the ones that bear the most risk. At Valmark, we really take seriously the job of equipping our member firms to serve their clients. While we're under no legal obligation to do so, we believe that acting in clients' best interest doesn't stop when we make the sale of a policy. So to help understand this complex transaction, the insurance entities that are in the state of Delaware, Iowa, Minnesota, and Colorado, we hired a former regulator to help us sort out which states had to approve the transaction. We got the 200-page filing with the state of Colorado and determined that Colorado is the one that will decide the fate of policyholders. We created a report that's attached to this short video that outlines the entire transaction and the risks to policyholders. So what should you do if you have a client who has a Voya policy or any one of the former companies that it acquired? Well, we urge you to take action. Write the Colorado Insurance Commissioner and ask him to stop approval of this transaction. Also copy your state insurance commissioner as well. You can request a Word document as a starting place for writing a letter. Second, when the dust settles, we should all learn how to better serve and protect clients from this very kind of transaction. Cash value life insurance policies are by their nature designed to be one of the longest held financial instruments any client's going to own. And many of the clients impacted by this sale actually purchased policies from Security Life of Denver when it was owned by ING and had a AAA rating. They were often led to believe that this was the safest choice they could make. But our experience shows us that ratings are illusory, as the actual writing entities can be transferred to someone else who's less well capitalized. Another lesson we can learn is some policyholders are going to be adversely impacted more than others here. For the last 3 years that Voya was writing life insurance in the United States, it wrote almost exclusively IUL, the very product that allows the company to change the most portion of the client's benefit through non-guaranteed elements. Those who will be less at risk are ones with well-funded variable life products. The separate account protects policyholders better in situations like this than any other design. Claudius, the Roman philosopher, said, "No man is wise enough by himself." Here at the Valmark Financial Group, we work with our firms to bring the golden rule to life. We hope that the information we provided here will help everyone listening to better serve and protect their policyholders.